Hello traders, Gary Wagner here. Approximately 10:40 in Honolulu, 5:40 in New York. It is Friday, finally, the 24th day of August, 2012, and this is the daily report for gold and silver. As we get close to the close of the week, we have had one phenomenal week in the precious metals markets. Currently, we are basically unchanged for the day in gold. Currently trading, as you can see, at 1670.3723. It is moving around a little bit. But traders, here's the net news. This week alone, what we have seen in terms of a gain is 3.3% gain this week alone in gold. That's a significant gain to the upside as we saw this market really take off. However, the really big news this week is the gain that we saw really in silver. Silver is currently trading up about 20 cents on the day, about 0.5% higher, but the gain on the week, traders, is something that I believe is significant. And that is when we look at the gain that we saw this week alone in gold, you are looking at 9.4% in terms of a net gain on the week. That is a tremendous move to the upside. As we look at this market, this is a 440-minute chart, of course, and you can see this nearly vertical straight move up. Of course, we positioned ourselves, we did enter the market in terms of pricing structure itself. In silver, we are in just above 29 at 29.10 right in here. That's where we entered the market here. And in gold, we are long at 1636. Traders, to give you an idea of what a 3.4% gain looks like, weekly chart. The chart is spot market gold, 1670 current print, and as you can see, this last candle right in here, that represents the week's move. If you look at the body size and the candle itself, there are a couple of things that I believe are pretty significant that we can take note of. The first thing that you want to see is the actual low of the market right in here. The bottom of that tail is almost where it opened. So it opened near the low and it closed near the high. Very little tail on a candlestick chart right in here. Also, very significant body size when you compare it to the body size of previous weeks, such as in here or in here, as we were trading in a consolidating market. Traders, of course, the really big news this week was, first, minutes released from the FOMC meeting of last month, in which it appears as though the Federal Reserve is ready to act. And I underline the word ready because that's the word that really prompted this significant rally in the market, as well as the fact that we have a major annual meeting going on with the Federal Reserve in Jackson Hole, Wyoming next week. Significantly, when we look at this market, we have definitely gone to the upper levels of resistance, and you notice it on a weekly chart. First of all, I am drawing it from the bodies. I'm removing the highs. In other words, I'm going from where the close is, and in the same way on this bottom support line, I'm going from the bodies. In other words, removing the absolute lows and going from the open to the close. You can see that it's very significant. We're right here at this level, of course, right butt up against this particular compression triangle. Why is that important? Well, traders, it's my belief that once we see this market take off and move above this resistance area significantly, my sentiment is we can absolutely characterize this long consolidation and correction over. Why is that important? It's important because if in fact this market is following any kind of Elliott wave count, meaning there's a natural pattern within the way the cycle of gold prices has been moving, we are in store for an impulse wave, a major fifth wave, and the major fifth wave, of course, has the ability and should in fact take us to new all-time highs. Traders, now in terms of a technical basis, the reason that I'm so excited in terms of our long count, the major count in our Elliott wave, that goes all the way back to really the end of 2008. That's when we hit this low right around $700 after coming off of a record top at that point of $1,000. So we went from $1,000 and retraced $300. That was the end or the conclusion of the correction. It was a simple ABC count there, very, very unlike what we're witnessing here. But in terms of our long count, our first wave, second wave, third wave, if we have a conclusion of our fourth wave here, which I believe is a high significant probability that we have had that, we've got our low here, and that means that we're now going to go into our fifth wave count. And what that means is that in Elliott wave, when we take a look at a 5-count market itself, this fifth wave typically is about equal to the first wave. And when we take a look in terms of the price movement of this first wave and we carry it over to do a little forward forecasting, this is what we come up with. And traders, all I'm doing here is using a scalable line. You can see that I've put the line in from the low to the high of wave number 1, and I'm simply going to carry it over to wave 5 and peg that at the bottom. The bottom being, well, our lowest low is going to be right around here, call it 1520. And when we do that, what you will see is that in terms of a straightforward price projection, if wave 1 equals wave 5, you're going to get roughly in terms of a move back and above our contract and record high 1920. And my projection is somewhere above 2,000. Now, why do I say above 2,000? Because typically what we want to look at are different levels in which the market could move to. 100% extension, 138% extension, 123% extension. And this is what that would look like. This would be the Fibonacci extension that we just spoke of. In essence, what we've done is we've taken our extension from the onset or the beginning of this major cycle from the distance that we saw in terms of a move in wave 1, right in here. We took that and then we extend it. We drop our low right around 1520. I've got it set at 1526 and then extend it up. So if we get the following, meaning if we get wave 5 equal to wave 1, you're looking at about 2041, 123% extension, 2163. And 2238 is 138% extension. So the fact that we can honestly say, okay, we have concluded our long correction, the fact that we're going to go into this major impulse wave is extremely exciting. Why? Well, because we're looking at the real possible potential of new price highs, new record highs in the gold market over the latter part of this year and into 2013. And traders, to me, that's extremely, extremely exciting. At the beginning of the show, I used a weekly straightforward candlestick chart to illustrate what a 3.4% move would look like. Well, what about a plus 9% move on the day? And you can see that, of course, right in here. This is our weekly chart. This is cash market silver. You can see this tremendous move. This is what it looks like to see a almost 10% gain in a week. Tremendous, tremendous, tremendous breakout move in the marketplace itself. Very, very similar also to that of gold when we consider that both the precious metals have been literally in this compression triangle. Let me try to line that up as best I can. And as you can see, we had this descending top, meaning we had a series of lower highs. That was in terms of resistance. In terms of support, also very, very similar activity to that of gold, in which we had identified, and this is weeks ago, of course, this really, really strong support, this triple bottom right in here. This is that long base building that we saw in the marketplace. Absolutely, you can see utter breakout in the marketplace itself. Now, through the week, I have talked about different levels in which I felt we had the potential for silver to move to. And to best illustrate it, we have been using this 420-minute chart, Heikin Ashi format. And as you can see, we charted a simple Fibonacci retracement from the, not the record top, this is that secondary top at around $38 down to these lows of 26, a $10 move. And the first thing that you can see is when we chart, this is the 23% level. You can see we have a series of resistance areas here. As the market comes down, it tries to push above it but cannot. The market then continues lower and finds support really at this base being 26, just above 26. And when the market took off, as you can see, it pretty much blew right through any kind of resistance we could have found, 28.81. That was the first level we were looking at, just flew through there. And now we're consolidating and forming a base at around 30.5. As you can see, close on the market above that, 30.72. So it has closed above this particular now should be support. It was resistance at one point. What is my next target in terms of silver? I'm looking for almost $32 an ounce. I think that's quite achievable, and I think that's achievable in a relatively short period of time. 31.90, 50% retracement from this move. Traders, it's been an awfully exciting week this week. We've got great positions in the marketplace itself. More importantly, we've got some important fundamental news that will be surfacing next week as the meeting in Jackson Hole, Wyoming begins. I believe Bernanke speaks on the 31st of the month, and that would be at the conclusion, of course, of the conference itself. We're positioned right. Let's see what happens next week. This has been Gary Wagner wishing you, as always, good trading. We certainly got that this week. We'll talk to you on Monday for another daily report and update. Bye-bye.